What's up, guys? Welcome back to another video. Today we're going to be going over how to actually read a stock chart. If you're thinking about investing in the stock market, this is the #1 thing that you need to learn first before anything else, before you even think of putting any money into the market. Besides actually learning your trading platform and knowing how to use it, or maybe knowing how to buy it and sell a stock, this is right up there with the bare bones basic. This is the foundation of your trading career that you're going to build off of. So we're going to start off with a picture that I have here that explains how a candle is made, how a candle is done being formed, and what the wicks mean, what the bodies mean, why it's red or why it's green. So we're going to start off with the first candle, which is green. Green means the stock, or the actual price of the underlying value went up. So you can see here it's a bullish candle. Bullish means anytime you hear somebody say the bulls or the bears, just bears mean that the price is going down, and bulls mean that the price is going up. So if we look at the candle, anytime you see a green candle, just know that the price is going, the candle started at the bottom. So not at the bottom of the wick, which is what most people think, but it's actually at the bottom of the body. So you can see the big rectangle here is actually the body of the candle. Okay, and you can see this arrow pointing at the open. So that means that whatever price this was, the candle opened at this price. And then the way it works is, the way these wicks are created is the price dipped down. So let's say we opened here at $1, the price came down to 99 cents, and then it came back up, creating this wick. Okay, then the price kept going up and up and up and up and up, let's say to $1.05, and it hit this high. You see this high here? So it hit this high. This is the upper wick. Hit this high of $1.05. We're just using that number as it's an imaginary number. And so it hit this high, and then it ended up pulling back a little bit, and it closed here at the top. So to go over that again, the candle opened here at $1, came down to 99 cents, and then it started to come back up, and it came up and up and up, hit $1.05. We're just using that imaginary, and then came back down and closed here. That's what creates these wicks in these candles, and that is for a green candle. So just remember, the most important thing is, when you see a green candle, just know that the bottom of the triangle, or I mean not the triangle, the bottom of the rectangle, I don't know my shapes, is the open. So this is where it opened, and the top is where it closed. Okay? And then for a bearish candle, which means that the price went lower, it's the exact same way, just flipped. So if we look at this, the open is now at the top of the rectangle, and the close is at the bottom of the rectangle. The wicks still mean the exact same thing, so we're going to go through it just like we did the bullish candle. So the open was at the top, and you can see what it ended up doing was it came up, 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 hit this high. So we'll start with the same example. It started off at $1, right, at the open, came up to $1.01, and then came back down, came down to, let's say, 95 cents, right? Hit 95 cents, and then it came back up, and it closed here at 99 cents, or whatever the price was, right? But either way, this price started at we'll say $1, and it came down. So it always has to go with the red candle. Just know that it always goes, if there's a wick on top, the price actually went higher, and then it came back down. And if there's a wick at the bottom, it came down, but it came back up a little bit. So that's what creates these wicks. So just know, when you see a bullish candle, the open is going to be at the bottom of the rectangle, and the close is going to be at the top. That's the most important. And with the with the bearish candle, sorry, I can't speak. The open is going to be at the top of the candle, and the close is going to be at the bottom. So if you think about it, it kind of makes sense, right? Green means it went up, red means it went down. So if it opened at the bottom and it closed at the top, it means it went up. If it opened at the top and it went down, that means it closed at the bottom. All right, now looking at an actual stock chart, we can go to my TD Ameritrade account. And most people looking at this would be like, holy cow, you know, look at all this red and green and red and green and red and green and, you know, all these things going on, right? But it's actually really simple to understand. We're going to break this down to be very easy. So first of all, you have to understand that the price is determined on the right side of your chart here. Oh, sorry, don't mind that. And this is the price. This is just the y-axis, and this tells you at what at where the candle's at. It will tell you the price of the underlying, you know, stock or whatever you're looking at. So if you see my cursor here, if I move it over, you can see the price here is at $181.69. So this goes down to $180.60 and up to $283. So this just tells you your price. So if we zoom in here, let's just zoom in on a part of this chart here. So we'll just zoom into a random part of this chart here, and you can see that there's different green and red candles, you know, going back and forth, and they do have wicks on them, and you already know what the wicks mean. Wicks means that the price was there at one point, but it didn't close at that point. So we're gonna look at these. Let's look at these two right here. Zoom in here. So just like the other two candles, you can see that the price for this green candle opened up here at $282.03. It came down to $202.01 and then came back up all the way to $202.16 and pulled back to $282.16. So the opens here and the close here. Now we go on to the next candle, and you can see it opened up here at $282.15, came up to $282.17, came all the way down to $282.01, and then or 1 cent, and then came back up to $282.05. So you can see this is just the exact same thing, just flip-flop like I was saying. And another thing you have to keep in mind is candles don't open up. The next candle won't always open up where the previous candle closed. So for example, if you look at this, if we look at this red candle, you know, we know the close is at the bottom right here, and then the green candle opened up right where the red candle closed. So at $282.03 is where the green candle opened, and it closed up here. But then you can see there's this small gap. This gap can be a couple cents, you know, sometimes it's 10-20 cents depending on how fast the stock is moving or if people are buying it or selling it really quickly. But the close of this candle does not always mean that the next candle is going to open up at that close. So just keep that in mind. So then another thing to go over is the actual volume here and what each candle represents as far as time frame. So everybody will have a volume chart here at the bottom, and what this volume chart pretty much is saying is it'll tell you how many shares are being traded in that current candle. So we'll see here this big red candle, and we see this big red candle here at the bottom on this other chart. This is your volume chart, and you see if you follow my cursor to the right, you can see this number 100, 200, 300. Sometimes this will be in thousands, sometimes this will be in 10,000, 100,000. For this case, it's in the millions. So you can see that there was over 300 million shares traded just in this one red candle here. And that kind of gives you a perspective on how strong the incentive is to buy or how strong the incentive is to sell. So, you know, if there's a big red candle, then that could mean that it's not maybe a great time to buy, or if there's a big green candle, it could be, oh, this is a good time to buy. And then for the time frame, you know, if we come up here, if you follow my cursor to this time frame, you can see you can change the time frame actually of the entire chart and the candles themselves. So there's some preset ones that are pretty simple and we use here. I have it set to the 1 minute 1 day, or 1 day 1 minute chart, which means if I zoom out all the way, you can see this is one whole day of trading. So this is the morning 6:30, right when the market opens, and it the market does what it does all day, and it closes right here at 1 o'clock. This is Arizona time, so yeah, and this is all aftermarket trading and all pre-market trading. So this is one whole day, and each candle that you see, each candle represents 1 minute of trading. So this candle will go up and down like it does with the wicks and all those things, and then it'll eventually close after 1 minute, and then the next candle will open, and then the next candle, the next candle, right? And so we can change this to 5-day 5 minutes if we want to get a bigger perspective. So each candle now represents 5 minutes of trading, and the bigger picture is 5 days, and we can go all the way to 4 hours, 180-day chart, and 4 hours. So each candle now represents 4 hours of trading, and we can see over a 100-day span of the stock market. And your time frame also correlates with your volume. So your volume chart, each candle now represents 4 hours. Okay, and that's pretty much all there is to it. I mean, there's not much else to it besides that. Your green candle's going up, your red candle's going down. There are different strategies and patterns that you look for within these candles that you'll use to determine whether it's a good buy or a good sell. But that's pretty much it. If you guys have any other questions or something I missed that you just want to put down in the comments and let me know, go ahead and write it down. If not, hope you guys have a good one. Peace.